Are we live out there? Yes, we are live out there. Good morning, everybody. Happy hump day. Welcome to Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick here with you today. Talking more retail. We got a number of retail earnings: Nordstrom, Urban Outfitters, Dick's Sporting Goods. We're going to talk Toll Brothers. Going to talk Wendy's. Nelson Peltz, who's an activist investor, is also Wendy's largest shareholder, teasing the idea that he could take Wendy's private. And if you're watching at the close yesterday, we were talking about just the max pain in travel stocks. I want to get Dennis' thoughts on that, on the cruise lines and the airlines and the casinos, because that's where the max pain is right now. Craig Johnson is today's guest. He is managing director and chief chief market technician at Piper Sandler. That'll be at 8:35. And that's going to be the show for the day. We'll try our best to take questions from the chat as we always do. So please drop your tickers in there. I'll do my best to write the tickers down as we go throughout the hour. So I'll have a whole list ready at like 8:45 for us to just rip through them. So smash that like, hit the thumbs up, hit subscribe, and let's get this show on the road here today. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. And now I'll bring on Mr. Joel Elconin. Joel, good morning. How are we doing out there?
Happy Wednesday. Is that a saying or not?
Sure, it's hump day.
Okay, hump day. We were green. We're now red. We're down 18 handles at 39.2250. Kind of in no man's land here. Crude up $1.35 at 111.11. That's a nice round number. Gold giving back some gains from the last 2 days, down $12, 1853.40. Silver, that's just in the red by 31 cents, 21.76. Bitcoin futures, man, just hanging out under 30, up $70, 29.375. Ethereum down 19 at 1937.50. Well, we can come in and we can replay the show from yesterday and talk about retail stocks, at least one getting killed. We got one in the green, barely, one getting killed, and Urban Outfitters up 56 cents. So 2 out of 3 are in the green.
Not bad. Nordstrom right? Decent. Nordstrom decent.
Dennis, is that a new shirt?
Yeah, look, collared shirt. No,
Where'd
my
you
buddy.
Get that thing?
I think my buddy intern won a golf tournament and gave me this shirt. It's the only way I can get a collared shirt.
I was going to say, you don't own many collared shirts.
No, I know. That's the only way I get one is if it's given to me. He said, this one's too big for me. You take it. So anyway, so I took it. I was like, yeah, I'll take it. This is my fancy shirt.
Backhanded compliment.
I mean, I look good every day. But,
pretty much. You know. Here, fatty, you wear this.
XL, right, baby?
Definitely XL on everything, and sometimes I hit the double XL.
You hit the double XL?
You don't.
I have. Yeah,
you don't. I'm calling no.
There's definitely nothing in my whole wardrobe that is. If it's large, it's gonna be skin tight on me, man. So it's the XL and the double. When you're pressing 215 to 220, Joel, you've never been up there. The double XL is just comfortable.
Man, but isn't there major resistance at 220?
Oh, yeah, and I keep trying to fight it, man. When I was running last summer, I actually did start doing a little bit of running. I actually got down to almost 200 pounds. That was the lightest I've ever been. Then we went through the tundra of Georgian Bay. It was a 7-month winter, and I'm in my rental, obviously still building my house, no treadmill or anything, so that's where the pounds just pack on.
You guys remember Ross Cameron from Warrior Trading? He used to tell me that he would punish himself for bad trades by running more. So maybe that's something that you can do. You can punish yourself. You run an extra half mile for every bad trade you make or something.
I got to start doing some more exercise.
I don't know.
Sure.
All right, let's talk retail. Let's just start with Nordstrom here, because I'll be honest. I guess the bar is very low. and they came in above the low bar now. So it's a bit unusual when you're trying to like paint the picture in your head of the general sense of the industry right now, because you had a handful of disasters last week, and Nordstrom was decidedly not a disaster, right? The earnings per share, they lost money last quarter, but they only missed the estimate by a penny. Their sales came in above estimates. They also announced a $500 million stock buyback. Wall Street always loves to see that. And their forward-looking guidance was okay. It was actually pretty good. So not a train wreck for Nordstrom.
It actually, the stock and the stupid news algo, man. I'm telling you, how dumb is this news algo, Joel? If this thing hit 25.50, what are you doing? A little less aggressive on the programming. Okay, yeah, they beat, but why buy it up 25%? And it's mostly giving it back. I mean, sell the rip, has working. I'll say it again. Sell the rip, working better than buy the dip ever has. I mean, this is just ridiculous. It goes to 25.50. 25, 24.50, 24, 23.50, 23, 22.50, 22, 21, 21.40 now. I mean, now, okay, that makes sense. 25.50 never made any sense. Don't get so excited.
Were you watching it,
anyway.
Dennis? Were you watching it when that?
Yeah, I was, because I was trying to trade Macy's and Kohl's against it. So I was watching it a bit. I actually was trying to short it multiple times too. It ran. You don't want to be like. The problem is when you say go 24 and it's like it's going so fast. You're like, you almost want to wait to short it until it stops going up. And it's a good lesson in shorting stocks, because everybody thinks, oh, it's just easy. You just short it. Well, you could sell at 23. Now it's 25.50 in your face. You're now what? So you almost gotta like wait until she gets that initial oomph, dust settle a little bit, and then it starts to come in, and then it's harder to get on. And you know what else? You know what else on the JWN? You got the bloody tick, because it's moved over 10%. I think it was anyways. If the stock moves over 10%, maybe it wasn't actually. I think it was though.
Yeah, because it closed. Yeah, because it
closed.
The
stock moves over 10. No, actually it may not have been, but in a lot of these cases, it's like right now you got tick problems. So if a stock moves more than 10% in a day, they throw the tick on. They say, no uptick rule. Like Kramer, bring back the uptick rule. We've got an uptick rule. They brought it back in 2010. You guys are just too stupid to realize it. It came back out alternative uptick rule. If a stock moves more than 10% in any given day, you cannot short it on. You have to short it on the offer, which is worse than the old uptick rule. You have to short it on the offer for that day and the next day. So there's all kinds of stocks that have been doing this, and you sit there and you can't get short. The old uptick rule was actually less. It was actually easier because it was an uptick bid. You could hit the bid to get short, but this one you can't even hit the bid at all. You have to find somebody to come and buy you. So it's not like, I can pick off somebody that's there that's bidding it. You can't do that at all. So the rule makes it really tough on shorts actually. Which
I just can't believe
leads to market inefficiencies is all it does.
I just when I see a chart like that and I see what the stock has done, I don't see why bigger players just wouldn't have scattered orders out there, like 22 and a half, 23, 23 and a half, 24.
You want to know why, Joel? Do you want to honestly know why? Because all the majority of the money managers aren't trading after hours. They're home with their family.
True.
They got $1 billion under management, but they tap out at 4:00. And the other thing is, for the most part, if you're trading an earnings stock, you can get it, but a lot of times after hours, what are you going to sell? You get 500,000 shares, you got 100,000 shares. Is it even worth it? So the big money managers aren't sitting there after hours and not doing it. You got day traders like me. You got smaller traders like me. You got the odd institutional money manager probably still trading after hours. But the majority of them are like, I'm not trading after 4:00. Going home to my family. I'm getting paid no matter what.
Just get paid a little bit less.
I only get paid when I make money from my trades. So I have a little incentive to take advantage of these ridiculous inefficiencies. But normal money managers, it's a drop in the bucket, right?
I gotcha. Okay.
Not worth it.
Let's just look at this now. It's kind of settled down. We are trading above yesterday's high. I'm going to throw out the high and throw out the low from the pre-market trading because, I don't know, you may see that low. You're not that far from the low. Look at that. They took it under 20, and yesterday's low was 1973. So there's a smart algo because it went to 1970. So that was a good buy. Let's see. Let's just prove we can hold 21 here. Yesterday's high was 2095, and then I'll say 23 would be a nice target. That splits a couple highs, the 3 and 4 day highs.
Let's move on to Dick's Sporting Goods, DKS, which is actually the biggest loser
Wow.
on my movers tool this morning in Benzinga Pro. It's down almost 15% on its report from like a half hour ago. Earnings per share for last quarter, they beat. Sales for the last quarter, they beat. EPS though, guidance was not great. Their comp, their same store sales guidance for the fiscal year, they said it's going to be down. It's going to be down 2 to 8% on a year-over-year basis. These are stores that are, these are sales at stores that have been open for at least 1 year. So discounting all their new locations. So sales going to be down 2 to 8% on a year-over-year basis for the rest of the fiscal year, and that's not what you want to hear if you're investing in this company.
And I mean, this is just the market we're in. You can't have all the stocks trading higher. They got to hammer something. So, I mean, we talked about Dick's. The pull forward on Dick's from COVID was probably incredible here. This was a COVID stock. This had the big bubble. We talked about that bubble potentially bursting and coming all the way back to where it started. I think we even said 60, did we not, Joel? I feel like we covered this, and maybe it was a different chart. I feel like we covered this a couple days ago and saying, well, it's coming back in. It came from 60 when COVID started. Maybe that's where it's going back to. Anyways, that's where it's going back to. It's 58 it got in the pre-market. You can see what I'm looking at. The 2020, when we broke out early 2021, right before COVID was starting, but kind of when anybody on social media was starting to realize that it was starting.
Because COVID was 20.
Time is a construct anyway.
Oh, you're right. So we got to go further back. Hang on.
Yeah, I don't even want to talk about where it was.
Oh, yeah. Crap, Joel. Oh, sorry. I take it all back. This before COVID started was 40. Uh-oh. If this decides to give the whole COVID thing back, we got another 21 points of downside. Yikes. I saw that first little bit. Getting my dates mixed up. Wrong. Maybe this wasn't the stock
it's
we were
hard.
talking
It's
about.
hard to differentiate the pandemics. I mean, it's no.
The
You mentioned
non-stop pandemic.
the COVID low was in single digits at 796. You did talk about 60. We did take it out. I mean, there's a couple monthly lows there. So 6135 was a monthly low, and 6126. So you got below it, I don't know, 60 to 61. I mean, if you're trying to bring a short in, I wouldn't, I don't know about trying to go long in that area, but that looks like decent support if you took it home overnight, down $10.
What was the PE coming here, Mr. Israel? We'll throw you under the bus, do some funnies with you. It was low. It's still low. It's been a value trap though, because these earnings were all inflated.
Forward PE for Dick's Sporting Goods.
What was the trailing?
They're both 5. How about that?
That's so low. But again, remember,
the earnings are coming
inflated
down.
earnings. People were buying stuff as they were doing all outdoor activities, and then we are never going to go inside anywhere again. That's over. So we give it all back. If we come back to where we were, it was $40. If you put it in your long-term portfolio at 61, are you going to go wrong? I don't know.
You used to say that with a lot.
I used to, I know. Every time I say that, the stocks just go lower. I said Disney at 120. I didn't think you were going to go wrong, and here it is $100.
You yelled at me when I said that
it's
about
tough
that
to buy
mentality.
stocks. They all go lower.
I haven't bought a stock. I don't even know.
Well, you're a genius. I keep nibbling. I can't.
I just watch what I have go down. I haven't.
No, Dennis, that's going to pay off for you because
I don't know.
Well, you've proven time and time again that it's easier to get out than in. So the fact that you're getting in, even if it's hurting you now and it'll hurt you tomorrow again, probably it'll hurt you next week too. You fast forward 12 months, I think you'll be okay.
Or 5 years maybe. In the case of the financial crisis, here we'll do. So I did. I felt this pain in 2008 and 2009. We're not in the financial crisis, but some of the stocks are trading, similarly, where you're like, okay, I'm going to put this away and it's going to be okay. I can remember buying like MRK at $35 back, I believe, during the financial crisis. Like my charts don't go back long enough, Joel, but maybe you can show it. Just we're trying to prove like long-term investing usually does work. We hope it's going to continue to work.
I mean,
But I think I bought this at 35. I think it was back in like 2008. If you can go back that far, Joe's going to scroll back to my memory. Scroll.
Yeah, all right. So
scroll.
you bought
Keep
it like
going.
you bought it like that summer. Summer of
Yeah, go to
yeah.
2008. 2000.
All right. So it
There
worked
you go.
out for it.
So here you go. I bought it at 35 in 2008, and the freaking thing went to $20 the next year. I was like, XP is like 5. I'm like, this is Merck. And I took a pretty good size position in it, like a double size position. And I'm absolutely getting killed. 35, 30, 25, 20 in the long-term portfolio. And I'm like, oh my gosh, man, what a terrible buy this was at $35. And, here we are. It's now 12 years later, and it's $95. And I got paid those dividends. The dividend yield on Merck when I bought it was, I think, 6%. At the lows, I think it was almost 8%.
Nice.
So, I mean, there is, a year of pain that I felt. So it was a 12 months of pain. But eventually that paid off. And bring up MasterCard, which was pretty much the same thing. And I always talk about my MasterCard position. We'll bring it up. So, okay, so this came out. Okay, so this is tough. Is that the beginning of it? Keep going. Yeah, I think I bought this one in 2008 too. And I think I paid like, I think I paid like $16 for it. And it went down to like probably 12 or 10. And you're like, oh my gosh, I'm getting killed. And this one ended up making my portfolio. I'm up like 2,200% on it. We know I lightened it up just for the first time this year. Or I've lightened it up a couple times, but I lightened up the bulk of it actually in January of this year just because I was nervous about this market. So anyways, but you can see that I had some serious pain. I think there's going to be stocks that are going to do this. I think some of these, Kathy stocks are not going to do this, but there's going to be some stocks. If you're buying stocks with at reasonable valuations here, I hope, when we look at them 10 years from now, these charts look similar.
It's literally the exact opposite of 2020 when like you can scream from the rooftops, guys, this party will not last forever. Please take profits. Please.
Yeah.
And nobody will listen because everyone's having fun. And
now
it's the exact same thing, but the opposite. Like if you buy good companies, you'll be okay. But nobody wants to do it because it's going down every single day, right? So
every day.
Nobody wants to hear that.
Everything I bought.
Nobody wants to hear it's going to be okay, but it will be okay, right? Like, and
you hope. You hope it's going to be okay, but then sometimes it's not okay. And we could pick the wrong stocks, and some of these stocks will indeed go to zero. I tweeted a list yesterday, and it was all the Kathy names. Maybe you can find the tweet here just to show this list. I'm not sure who made it. It was just floating around on Twitter. So love to give credit to the person who made it, but somebody's probably stole it so many times from the original author. I just retweeted somebody else that had tweeted it, but if we show the list, it just gives you perspective. And sometimes we should just stop. So SPAC Tiger is the one that tweeted this actually. Good follow on Twitter. But you can see the list I'm talking about. I'm like, holy, look at these moves here, Joel. Vroom. Oh, yeah, 97%. Skills, remember when that was a Kathy stock?
Yeah.
That thing is down 93%. Carvana, down 92%. On this list here, I'm going to say, in my opinion, probably half of this list is going to zero. That's just my opinion, but I think half of this list is going to zero. There's going to be 3 or 4 awesome companies on this list. There's going to be 3 or 4 that'll be like, wow, I can't believe I could have bought it at that price.
Exactly.
But but all these companies, which one is it? Like we had the Affirm last year. We thought, oh, everybody's buying now and paying later. It feels like now they're buying now and paying never. So I don't know if I'd gamble on that one. I would definitely think Peloton. I think Peloton could be a zero. I've said before I thought it could go to $10. It did that pretty much, $11.25. It could be a zero. I'm not saying it is. I'm saying it has the potential to be a zero. Wish, that Context Logic, that one there, that was social media darling.
That's a zero.
Have you been on that website? It looks like it's straight.
I don't know much. I think that's a zero. I don't know much, but I think
it could be. It could be. We're not going to say anything definitely, but you look at Wish and you go to their website And Christian Fromhertz, I remember him tweeting out, he's like, have you been their website? It looks like straight out of the 80s. It's a horrible website.
It's not
So, I
good.
mean, you look at all the stocks on that list, and
not
you're like,
good.
oh, wow, these are juicy. They're all going to come back. Stop thinking about where they were. Stock goes down 90%. Fun with math. If a stock falls 90%, it has to go up 1,000% for you to get back to even. That's the fun math of it. Goes down 90, got to go back up 1,000 to get back to even. Good luck with that. Stocks go down 97, very few are going to ever come back. It's just too much. So just be careful, just randomly buying the dip on everything, because it can get ugly. It can continue. You got to buy good companies at reasonable valuations if you're a long-term investor. I'm trying to do that. We're throwing a little bit of speculative stuff in the mix, but it's been a tough 6 months to invest. I'll tell you that.
Just to put a bow on the Dick's Sporting Goods real fast, if you're looking for other stocks trading off of it, HIBB, Hibbett Sports, is down 6% this morning, and then Academy Sports, ASO, is down 7% this morning. Those are both trading off of Dick's Sporting Goods here today. So,
and Hibbett reports Friday. So, but low bar for Hibbett now. Again, these things, $100. I mean, oh yeah, we're all going outdoors. We're never going to eat inside again. Nah, it's over. COVID stocks seem to all be giving it all back. Where did Hibbett come from? Like where they were, that's the best activity you can do right now for all these things.
$20, $25.
Yeah. So there you go. So you think, 100 to 40, whoa, this is cheap. But if they decide to give the whole COVID move back, you get cut in half again. Scary.
Yeah,
thoughts.
they're losing 40 on this one. That's been that was a monthly low in December of 20, and then it's just hanging out on the monthlies there, and now boom, it's busted through. I'll tell you right now with Dick's is they need some smaller stores, man. They're gonna close. They're gonna close stores, and then they need smaller stores.
They're
their
big
stores, they're just too big. I mean, oh man, moving all that stuff around, and they're probably paying higher wages, but
and that's the other thing too, is we continue to forget these retailers are getting their margins squeezed on both sides. Input costs, these products are coming in and they are more expensive to make, which has nothing to do with them. They come in, they're like, well, we got to jack the price. And then the consumer service, which I never told you about my story on the weekend in Toronto. I went down to Toronto, and I did mention that I was down there. It's a terrible thunderstorm, by the way. But did I tell you this one? So we're at where the toaster was. We were at a fancy kitchen store because we're building the house, looking fancy kitchen stuff, right? So not buying an $1,800 toaster, but I had to take a picture of that and tweet that out.
Okay.
But I mean, the customer service right now, has it gotten way, like, it just seems brutal. And maybe it's because people don't respect their jobs as much, but it was never great. I mean, and if you go to like Japan, customer service is unbelievable. I mean, people really value their jobs. Here in retail, it's like sometimes, you get good customer service. Like, another side example, we're telling stories here. I was at Popeye's Chicken, I remember 5 years ago, and I'm trying to order, and the cashier is sitting there as I'm like trying to figure it out. She's rolling her eyes at me, man, because I'm like taking so long to order. That's typical fast food customer service. But I'm in a fast food kitchen store with $1,800 toasters. And we ended up buying a sink. We bought it was a sink for our garage. Anyways, it was not fancy, but it was a tub like for washing paintbrushes and stuff.
A slop sink, right?
Slop sink, yeah, slop sink, exactly. Anyways, I'm like, first the guy can't find it, and he's like, well, I don't know where it is. I'm like, well, are you gonna go find somebody that does know where it is? 10 minutes later they find it's over there, and we bought it already, so like we paid. So I'm like, okay, it's pretty heavy. Can you give me a hand? He's like, it's not that heavy. I'm like, what? I've never had. He says it's not that heavy, and I'm like trying to like lift, and then I had to get my wife and my wife carry it. I'm like, are you kidding me? I'm like, the customer service in 2022 sucks in retail. It really does. And then so we're taking us all the way back to Dick's. I'm not saying Dick's is bad customer service. I'm saying it's hard to get good people. You've got to pay people more money. So wage inflation is pushing prices up. There's labor, people are just not getting hired. So you got to take whatever. You got to take the guy because I can't get anybody else to work here. That won't even help somebody lift something.
Wait. Tell us how you got the sink into your truck, though. It's now I get this. Now I got to know.
My wife had to lift it. We started picking it. So I'm like, Laura, you got to give me a hand. She was like looking at other stuff because the dude here won't lift it with me. It's ridiculous. It was actually just big and awkward. I actually like bustled it a bit and I don't like this. I'm like trying to lift it, but it was awkward.
Right. awkward is code for is guy code for heavy. Okay.
Yeah.
If something is awkward, that's a guy saying it's not heavy. It's just awkward, right? But
He's
no,
like,
it's heavy. It's
can you give me a
heavy.
hand lift in this? It's
Yeah.
not that heavy.
Okay.
And he walks
I-
away. I'm like, what the hell are we? I'm in a kitchen store with $1,800 toaster. It's like, I can't help me lift the sink I just bought. Joke.
Did you ask for the manager?
Well, I did eventually. Yeah, I did.
Yeah,
But not to
gotta go
complain about that. I had to actually, because the sink. So here's my story, right, Joel? Same thing that you would do too. The sink's got like a little scratch on the front of it. So I'm like, okay, this is a brand new sink. I just bought a brand new sink. He's like, well, we don't have another one. I'm like, well, can't knock something off the price. It's scratched already. It is a slop sink. So I'm like, I'll still take it with the scratch. But I'm like, can you knock something off? He's like, no, the online store is because we bought this online. We were showing up to pick it up is different than this store. And I'm arguing. Finally, then I asked for the manager, and the manager came over. He knocked 10% off. So you gotta ask. You gotta ask. Get 10% off.
I got a story. It's not as good as that, and it's not about shopping. But Spencer, you know that thunderstorm that rolled through here on Saturday morning?
Yes,
It was
That
nasty.
Houston.
yeah.
There was
Big one.
okay. So not only is Lisa not good at Peloton, but I didn't even look at the weather forecast. And so we went out to Kensington, and it
Oh.
wasn't supposed to rain till like
That's-
11,
That
right?
sucks.
And we got out there a little before 9, and it started like the clouds were rolling in, and I'm like, "What do you?" I'm like, "Well, maybe we should just go for a little walk around here and stay near the car." No, we're going for a bike ride. 4 miles
That
in, we
sucks.
stopped to drink some water, and the skies just get black.
It was a nasty.
And we just got completely drenched. We had no towels in the car, nothing. I mean, I was soaked down. My underwear was soaked. Everything.
Okay.
Socks were soaked.
You can stop there. You can. We got
Good
the picture.
weekend.
We got
that storm was nasty. It came in hot.
It came in fast too, because I'm usually pretty good. I'm like, oh, we could get to the car, and then like it just came right in. But
you guys start
right.
sending me a text when they're that bad, Joel, because I get the storm 6 hours after you do, because that's where the storm systems work. So now that I'm up in Georgian Bay, it shows up about 5-6 hours after it shows up in the D. So start texting me when they're bad like that. So
Okay, let's go.
All
Right, let's go. Where the chat's going to start saying
they're getting so angry. This is Storytelling Wednesday.
That's okay.
Don't want to talk about stocks. All they do is go down.
I know. We're trying to cheer you guys up.
Toll Brothers reported last night. Joel and I were talking about the housing starts data from yesterday. I mean, who in their right mind wants to buy a house right now with prices and rates going higher? But anyway, Toll Brothers reported an EPS beat and a sales beat last quarter. They reported they guided that they're going to deliver, oh my gosh, only 11,000 units for the whole year. That seems like nothing. They delivered 2,400 houses in the second quarter. 11,000 is their expectation for the year. How's the stock doing this morning? TOL.
Oh, I mean, this is like wasn't great. It's not talking great, but they didn't say anything that bad. So it's kind of a relief pop because it wasn't that bad. But those housing starts numbers yesterday morning supposed to be down 1% and down like 17% is what I'm talking about.
I mean, who wants to get a house right now?
You can't go start building a house right now. Take it from me. Don't build a house. I started before COVID started. I actually bought some stuff before the crazy, inflation. I bought our windows early, but everything. I'm at the tail end of this house, and I'm like, everything is just twice as much as it was last year. It's honestly that bad. It's everything. You're buying lumber, your $10 2x4s here in Canada. They were $4 before COVID started. So there's just so many things, like inputs that go into a house. They can't build the houses for what they were building before. I talked to my builders. I've talked to other builders, not my builder, but I talked to other builder. He said in Canada, they were building before COVID from $300 a foot to like $500 a square foot. So $300 cheaper end, $500 high end. That number is now $450 to $700 2 years, 2 years later. It's went up that much. He's like, we're up 50% on our house prices to build them. Like that's just passing it through to the customer. So, when you're looking at that, your $400,000 house they were building is now $600,000. So, I mean, there's just going to be a lot less people building houses because they simply can't afford them. So, I mean, this is not just a Canadian thing. This is an everywhere thing. These housing prices are very extreme to build new houses right now. And until those prices start to come in, people are going to be like, nah, I'm out.
Yeah.
Durable goods must be bad. We just took another leg lower in the S&P.
This is what we do.
39, 13, 50. But durable goods are must have been bad or something. That was
Oh, durable
that just
goods.
it was zero. There were no durable goods. They
There was
canceled.
There were none. There were none.
zero.
They canceled the report. We
No,
lost
There
no.
it.
was no durable
In
goods. It was
reality,
zero. That was funny.
in
actually.
In
reality,
reality, it beat.
core no, it didn't. Core durable goods for April month over month up
Zero.
0.3% versus an estimate of up 0.6%. Durable goods from March to April were up 1.2%, and from April to May were up 0.3%. So the big month over month decline there in durable goods orders, because again, who wants to buy big stuff right now? So that's the theme we've been discussing
Not fun.
for a while. What about Wendy's? Let's talk about Wendy's real fast, and then we'll bring on our guest. But
Real quick on toll.
yeah, sorry.
Boy, that 44. We talked about this chart yesterday. This is like Dennis's heartbeat. Like when he's trading, he goes up and down and up and down, and something spikes, and his heartbeat goes way up here, and then
Yeah, pretty much.
spike. 44, rock solid. But you told brothers shareholders what you wanted. You want to stay green first of all, first and foremost, and you want to take out 46.54. That was the high from yesterday, and there you got a little bit upside. Maybe like 48 would be a dream, but 44. I'll go with the ranges here. Make sure you take out that 46.54 before you get too excited. Anyway, if we bounce back, we hit 13.50 and we're back at 39.20. So just a little algo flush there, and
We'll go back to the
we're off the
Wendy's.
low. Wendy's. Let's go to Wendy's.
Wendy's. Been a long time since we've discussed this stock, and Nelson Peltz, who's an activist investor, famous guy, long-term shareholder in Wendy's, actually, out with a new filing last night. I have the filing up right now, a new 13D, in which, first of all, he increased his stake by about like 60%. He now owns almost 40% of the company. So that's the first thing. He owns almost 20% of the company. He owns 41 million shares. The second thing is buried deep in this filing, and this is where reading SEC filings and actually scrolling can benefit. Yeah, to really scroll down here to the section that's called purpose of transaction, to item number 4, and that's where he sort of gives some thoughts on why he's buying more shares of Wendy's. And within that paragraph, or several paragraphs, are a couple comments like, hey, we could be down to like take this company private, or take it over, or do some other strategic initiatives, and we're interested. So Wendy's is up because Nelson Peltz, who is a longtime shareholder in the company, A, bought more shares, but B, floated the idea that he could be down to buy all the shares.
And that's why it started ripping so high. So here, anybody who thinks it's easy shorting stocks, here's a story for you too. So I'm looking at this, and I'm looking at Wendy's. Peltz doubling his position. I'm like, okay, it's worth something. It goes 17.50 right off the hop, and I'm like, that's probably fair. Then it goes 18.50, 19. I'm like, are you kidding me? Are we getting this crazy again? And then eventually it hits up to 19.50. So anyways, just actually we're moving around here on the stocks. Sold. Just joking, but well, no, not really. 19. So it goes up to 19, and I'm like, well, this is just getting dumb. I'm like, it's too much. So I shorted at 19. I'm like, this is just dumb. And then it goes to 19.50. And then they start talking on CNBC. Of course, at that time, they start talking on CNBC. He may just take this might just take the whole company over. I'm like, oh gosh, man. And I, obviously I see that he bought more shares, but I didn't take the time to read that was in there, that line that you just read.
Yeah.
So I'm like, okay, so I don't know. So then it comes back down a little bit. I literally short, at 19. And it was only up there for like 19.50. And I'm like, and it comes right back into 19. I was like, I don't know. They're talking about potentially taking it. I'll just take it off. So I sold short at 19, basically cover, I think 19.10. So I lost 10 cents. And it comes right back into 17.50. So, I mean, this is, the dealing of, being short. You think, and eventually it's probably going back to 16, but it's not that easy to hold when you're right in the mix of it. And then they start talking on CNBC about your stock, and they start talking, you might just take the whole thing over. I'm like, oh gosh, I didn't know that he was like potentially doing that. I just thought he doubled his position. So anyways, I lost 10 cents actually, I think, on the trade, but now it is, if you just hold it and forget about it. I'll be up $1.25. So shorting's not that easy.
Joel, do you have thoughts on the chart itself? Joel, you're on mute. Oh no,
Joel.
I think his lawn's getting mowed right now.
Yeah, that's what it is.
My
Man.
lawn's getting mowed too. I tell you right now.
I should tell him not to come on Wednesday morning.
Not a euphemism. I'm
actually, it's me mowing my lawn because when Dennis starts talking, I run outside, I fire up the lawnmower, I do a little portion, and then I come back and I put on. And I'm like, oh, the technicals and Wendy's. Wait, where'd he go?
Wait, no, I don't know. He's still here. He turned his camera off.
Oh,
he's still here though.
Oh, is he mad at me? What happened?
No, I had my kid trying to break in again here. The girl is homesick. Wife had to drive the other kid to school, so I'm solo parenting here and trying to do the radio show. So she was knocking at the door, and I was like, "What do you need?" I was like, so I quickly shut the camera off. I'm getting good at that, so that she doesn't break in. I just camera off. What do you need? I'm on the radio. Hurry up, please.
I think with these kind of things, like with these Wendy's, I mean, when they get these pops, you just gotta. I mean, I don't know how quick you can be, but it always seems like you look after the fact, and I know it just goes up there in a nanosecond, but there were 3 highs like at the 1950 area. Now, in the moment you're looking at when you're short at 19, you're probably not drilling in your daily and saying, oh, well, that's a good resistance point. But we're trading up $1.48. And you got to do a reset now. Your next daily high, man, we got some work to do even to if we get to 18 and 18 bid, you still got a pair of highs at 1830. So I don't think you're getting another shot at 1950 today.
All right. Let's bring on our guest today, Craig Johnson, who is a managing director and the chief market technician at Piper Sandler. Mr. Johnson, good morning. Welcome to the show. How are we doing today? Oh, now wait, Craig, you're on mute too. So check your mic settings for a second. I think you may be on the wrong mic input there. And hopefully we can get you back on.
We'll get him.
Yeah,
he's tech savvy.
Yeah, Craig's a tech savvy guy. This is a new problem that we haven't had this issue with Craig. Okay, here's what I'm gonna do, Craig. I'm gonna move you backstage for a second, and check the little settings gear on the bottom there. Make sure you're on the right mic input, and then confirm that you are. We could try this one more time, and if not, I will step away for a second with and troubleshoot with him. But
do we know why? Do we know why we had that little pop there? That
I thought the durable goods.
Yeah, durable goods.
No, we had the down, but they brought it back up.
Yeah, that's just choppy. That's what they do.
Yeah, just a choppy.
Can you hear me now?
Yes, we can. There we go.
All right. Sorry about that.
That's okay. Craig, how we doing out there?
We're doing wonderful. Joel, I didn't need to hear about your wet underwear over the weekend, though. I mean, I got to tell you.
Actually, I don't think I was wearing any. I think that.
Stop it now, please.
I mean, I know the market's bad and everything, but that's a new one.
Please, let's move on.
All
right. So we had Ivan Fine. Do you know Ivan Feinseth at all from Tigris Financial Partners?
I unfortunately do not.
Okay. Well, he's our rah bull guy. Okay. And he even does better. I don't want to say better than you because you hung in there during COVID. You were like, the world is not ending. The world is coming back. Get out there and buy stocks. And we're like, oh, the world's ending. Well, the world didn't end, but it's ending now, Craig. So what?
It's ending now.
So come on, get back up on the pulpit and tell us why we should be bullish.
All right. So what I'm going to do is I'm going to share a screen with you, right?
Oh, yeah. I love this.
Okay. So I think this should do it. I think it's this one right here. What do you see?
Yep. Looking good.
Okay. So remember when we were all kids and driving in the car and everybody
can you just zoom in? Can you just zoom in, though? Can you make it bigger? Easier to see? Like on the top there, like they hit the plus sign.
It's right in the middle. Go back.
Whoa,
right there. A little plus. There you go.
There you go. Now you're cooking with gas.
So,
There we go.
There we go.
How's that?
Yeah,
there you go.
Perfect.
There we go. Much better.
We're
nice.
fussy
So,
on the show.
when we're in the car, the kids are in the back and you're on this road trip and it's like, are we there yet? This is like the number one question that I'm getting from investors across the board. And I'll tell you, we're not quite there yet. But here's the hope, and here's what I want to ultimately share with everybody
hope.
that's listening here today. So when I look at the price objective of what I'm thinking about year end and where I think we can go near term in here, it's very clear for everybody that this price action right here is a classic head and shoulders top. We've broken the neckline on that head and shoulders top, and we now need to reach that measured objective. I think we're going to reach that measured objective probably somewhere around the 4th of July. What is that measured objective to the downside? In my view, it's going to be right around 3,500. It's also going to be a 50% retracement level. We're also, guys, going to be talking about this particular chart up here too. This is our own proprietary work where we look at how many of the industry groups that we track remain above a 40-week moving average. Now, for all the listeners out there, you can certainly do something similar with looking at the S&P 500 or other indices and say how many of those stocks are above their 200-day. But right now, this indicator for me is sitting at 15%. Usually washouts occur sub 10% type readings. We're very close to getting there. And I think on the next leg lower, we're going to get to those levels. And then, guys, here's where it gets exciting and why I stick with my price objective is where it is. Because if you just look at the statistics of this particular tool going all the way back to the 1960s and 70s, and if I don't think that this is a oil crisis like 74, 75, where they just completely shut off oil coming to the United States, not the case. And if this is not the great financial crisis like 2008, 2009, and you look out 26 weeks forward from here, you're talking about median returns that are going to be way north of 10%. You look out 52 weeks and you're talking about median forward returns over 20%. So guys, what I'm saying is we're getting to that sort of final washout point. It's not time yet to step up and buy. But this is why my 47.75 number, I stick the flag in the sand and say, we're going to get there by year end. And there's going to be a pretty good rally. Because once we hit those washout levels, look at how market breadth typically just really expands very, very quickly coming off of these levels. And that is about as bullish, guys, as it gets in this market right now.
Craig, so I just why? So we're gonna wash out down to, you're saying 3,500 potentially,
correct?
And then why is everybody just gonna come in and just rip roar rally it all the way back up to new all-time highs? Why is that gonna happen?
Because when you go through it and you look at where the Fed is at right now, and you look at the forward sort of probabilities for interest rates and stuff, right now the market is priced in somewhere between 7 and 8 rate increases from the Fed. I don't think that that's going to happen. Right now, this is a game of chicken between the Fed and investors right now. And the Fed blinked in 2018 once the market sold off and really went down into bear market territory very quickly. They need to act to stabilize things. And I think what they're going to do is they're going to move from this really hawkish tone to a little bit more dovish tone. And therefore, the rate increases that are priced in start to get backed out. And when that happens, this is where we're going to get the big move to the upside.
Doesn't it all just depend on inflation, though? I mean, obviously, are you assuming that we are getting inflation in check here in the next couple of months, and that's going to be the catalyst to drive us higher? Because, I mean, we started with inflation. This problem started with inflation. It's no doubt, because that's why the Fed is raising rates. Mm-hmm. Are you waiting for, like I've said on this show, I want to wait till I see that first data point where I see the CPI start ticking down, like below expectations, and that's going to be my cue to jump in stocks? Are you looking at the data points at all? Or are you just simply going to look at the charts and let that tell you what to do?
I'm going to look at the companies, and I'm going to have those charts tell me what we ultimately need to do, because I think the market's going to be a better discounting mechanism versus just waiting for the actual government data to come through. And step back and think about it this way. You've talked about Dick's on the show here and sporting goods and some of these other things.
Yeah.
I think with the higher gasoline prices that are yet to come, you're going to start to reduce consumer demand. You're getting a huge inventory of products coming into these retail stores that they're going to want to move that inventory because they're going to have too much of it. And then they're going to start cutting prices. Consumers are also going to sit on their hands knowing that there are going to be discounts coming. Not only the scratch on the sink, Dennis, that you were talking about, you're getting more than a 10% discount in some of this stuff. And you just walk through a Home Depot and they are up to their eyeballs in inventory, and they're going to have to cut prices and move things along. It's just going to be a couple months down the road before that happens. But all these pieces, as we think about it, are going to ultimately bring down some of that inflation pressure. We're not going to bring down the wage inflation pressure, clearly, but on the consumer side of things, the higher gasoline prices and all these other pieces, I think, will ultimately correct themselves through the mechanism of higher price. And I think that process is starting to unfold.
We're on the line with Craig Johnson. He's a managing director at Piper Sandler at CFA and CMT as well. Well, first of all, if we get back to 4,800 by year end, man, I would be so tempted to get flat every one of my portfolios. And the thing is that, I mean, we're talking inflation here. I see other problems here. And I know inflation's a major issue, and that's what we're focusing on. But when you're doing, those, looking back historically at that indicator, what about, when have we had these kind of geopolitical circumstances? What's going right, Russia and Ukraine and the tensions with China. I mean, is that something that is just going to just be overlooked? It's not part of history. That's what concerns me. That's why I don't think we're going to turn around and go right back to 4,800.
So if you put that chart back up, Spencer, onto the screen.
Oh yeah, sorry.
What I want to make the observation here is, and I'm gonna zoom into this really so that you can see it in a very big way.
Thank you. Yes.
Okay.
Oh, look at that. I like that.
So let me just move this over now. So as we look at this, Joel, take a look at the dates on these charts in here, right? When we saw this sort of breadth down here, okay, a lot of that negativity, war in various periods,
Okay.
whether you've had high oil prices, spikes, crash of the market at 87, the tech bubble, all these other periods, a lot of negativity back then. My point is the market does a great job of pricing that sort of negativity into it. And that's what you're seeing with the number of stocks now breaking below their 40-week or 200-day moving averages. And there's no question that some of the CPI data and some of these other indicators, they may not turn around until 2023, but the market looks ahead 6 to 9 months pretty efficiently. And that's where I'm saying is I think you're going to see it in the stocks before you're going to see it in some of those economic gauges. And right now, the market is telling us that we're to levels right now that you've always wanted to buy stocks. Like you would have made money every single time if you were down there buying stocks when this gauge was at these sort of washed out levels. Am I wrong?
Okay, I'm bullish. No, you convinced me. No. Okay. All right, good
It's a tough
explanation.
market right now. I want to be bullish. I want to buy and I don't know, like Craig, I don't think I can time this bottom as well in my long-term portfolio. I'm a day trader. I do pretty well doing that, but I'm just like nibbling here. It's like, how should we approach this? Should we wait exactly for 3,500 or should we be like nibbling on some good companies at reasonable valuations now? Question mark.
I think, when you talk to the big portfolio managers that are, with billions under management, they're going to start to nibble on stuff down here that they want to own. They're not buying a full position. They might be buying a quarter position, something along those lines. And that's what they're kind of sort of starting to do and nibble at some of these things. And because they know that when they've got to turn over the portfolio in a big way, that's going to be very difficult for them to do. But in that last sort of big push down, I think they're going to be able to do some of that rotation. Liquidity will be there. They'll make some of the rotations. And by the way, guys, one topic we haven't touched on here today, just changing topics real quick, is, take a look at all the generals out there in the marketplace, right? I mean, if we take a look here at what's happening with some of these stocks like Apple, right? And what happens in the very last stages of any sort of market downturn is you basically see the generals of the market really start to sell off.
Yeah.
And is that not already happening? I mean, if you look back at some weekly charts, I know this, you're more on the day trading side of things, Dennis, but you look at some of these longer term charts and you look at these longer term charts and you've got bigger downtrend reversals that have already happened. And that is clearly a distributional looking chart. And even Amazon, the way it's breaking down, all these FANG stocks were the ones that held up the best that are now starting to break or have broken in a lot of cases. And Facebook has face planted, right? So this is all the kind of stuff that you want to see to provide confirmation and assurance that when we get to those lows, it's time to sort of shove the chips out onto the table.
So 3,500, put your buy order out there and wait for it. And then that's where we're going to make the money.
That's where you buy it, hold it, trade around your positions, get those core positions that you want done, and then you can day trade around those core positions, of course. But that's where I think you're going to make the real money.
And I'm not going to argue with you long term because, I don't know how early you were listening to the show, but, we were talking the financial crisis and I was telling about, my long-term portfolio. And some of my long-term portfolio, I started nibbling on these positions like buying Merck at $35. It went to 20 on me in the financial crisis. And I was like, 6 months later, I'm like, why did I buy that at 35? But here I am, I still own my Merck and it's 95, 12 years later, and you're happy with it, or MasterCard. There was so many different stocks. But one thing to consider, and I want to ask you this, Craig, too, is not all these stocks are coming back, though, right? Like there's a lot of people who are jumping still on the Cathie Woods bandwagon, and there's a lot of companies that maybe in that portfolio that maybe aren't going to be coming back. What are your thoughts here? Is it still about stock selection here?
I think it's still going to be about stock selection. You are right. There are some, call them zombie companies out there that haven't been able to really put up decent earnings or still losing money that probably won't come back. I mean, we saw that in the tech bubble, and we could very well see the same kind of things happen once again. Wouldn't be surprised. And I think that would actually be healthy. They clear some of that, call it dead wood, out of the forest. And I think it would be a good thing to have happen. In biotech land, you got a lot of companies that are now trading below cash value.
I know.
And they're still burning cash. I think there's close to 200 companies trading below cash value in that space. And so I think you got to be careful specifically in some of those biotech areas.
One more before we let you go. How about these utilities? I mean, just, you're hiding out. You're thinking, man, they're going to come for it. I guess it's the pricing power. Man, just
the resilient.
The resiliency of the utilities. Is that something you expect to persist, or eventually it's going to get tagged like everything else?
Well, we got a combination of a couple things happening here, right? So if you read through some of the most recent filings from the energy companies, like those companies have basically said, we've changed how we're going to pay executives. We're no longer going to pay you based upon oil production. We're going to pay you based on profitability, which means the likelihood of poking more holes in the ground at the pace we had seen when prices went up is not going to happen anymore. Parlay that into a discussion of the utility sector. We're going to try to put more and more consumption of energy into an electrical form, whether it's automobiles and everything else. And you look at these utility companies and Wisconsin Electric, Xcel Energy, you name some of these things, and they're not breaking down. They look like they want to take another leg higher. From a trading perspective, those are your classic defensive names, along with Lilly and some of those other names out there. But at this point in time, they're not breaking down, and nor are the energy stocks. And I think we got to pay careful attention to that, because again, they're probably not going to roll over until you get that final leg lower, which again, I still think is coming and probably happens before the fireworks at the 4th of July. But, Joel, the other thing we got to watch carefully in the energy patch too is if energy doesn't roll over and we start the next leg up, that probably means that we've entered some sort of period of time that looks like 2003 to maybe 2007 or 8, because that's when you saw energy lead and the market was moving higher. That's not typically the sector leadership of a strong bull market.
Right. Craig Johnson, Piper Sandler, he is a managing director there. He's also the chief market technician, always coming prepared with the charts. And I, like Joel, will never forget when Craig came on our show in April 2020 and was like,
talked me off the ledge.
Bye.
He talked me off the ledge. This isn't the zombie apocalypse.
I know. Oh, man.
I watched too much Walking Dead. We were like,
I'm
going
happy to
full-
come back on when we get to that 3,500 level and pound the table once again, because we're going to certainly get that, call it green light go sign to buy equities, I think, down at that level.
All right,
All
Craig.
right, I just learned more in 15 minutes. I did it 4 years of college.
I
Thank
know.
you,
Thanks
Craig.
a
I
lot,
really
Craig.
appreciate it.
Always a pleasure.
Thanks, everyone. Have a great day.
All right, man. Yeah, Craig always he always comes prepared with good charts. That's
he
the one
does.
thing. All right. So hey, that was a great conversation. Unfortunately, some people in the chat are a little bit distracted by the fact that we had a Mullen pumper in the chat. That person is
Paying, though.
gone now.
He was a paying pumper, though. We
more
allow
power-
paying
he-
pumpers, don't we?
I think
He
it was
tipped
a
us $70
lady.
more
to
power
talk Mullen.
more power to you. I mean, it's a 98-cent stock. Good
Or
luck.
whatever it is.
Good
What
luck
is
with that.
Mullen? Crypto?
It's an EV company. Good luck with that.
I don't even know what Mullen is.
Correction, $90.
What?
I've never.
We got
Is it
tipped
MULN we're talking about?
$90.
$1.
All right. I mean,
I've never even looked at this company before.
It's
Look at that! I just
it's
got
an
new stuff.
EV.
He tipped us $70 and he gave us a new ticker to trade.
no,
Although it's under
not-
$1.
it's under $1. I wouldn't. All right.
No comment.
Wait, what else from the chat? Did
Paying
we not
pumper.
discuss? We haven't just. I want to talk about China just briefly here because a lot of these stocks, were like when I come in this morning, I look at my pro, I look at what's up, what's down, and these are among the first things I noticed in the morning is a lot of them were trading up today. Like I saw Lee Auto up nicely when I hopped in this morning. It's off its highs now, but all of China opened higher this morning. You want to address Alibaba? I saw someone in the chat mention Alibaba as well.
I mean, we're at the
Alibaba
critical
reports
support.
tomorrow. Yeah, Alibaba reports tomorrow.
Oh my gosh! Oh, I didn't know that.
Yeah.
It does it.
Yes.
I have Baidu. I didn't know Baba reported.
Yes.
Baba does. I have
Yes.
Baidu on my list. I've had Baba too. I didn't know that. $73, washout low back on March 15th. That was JP Morgan low, we'll call it. And then, obviously, because they said China's uninvestable, that was right at the very bottom. And then 5 days later, ran to 120. That was a gift. We've come all the way back down. We have good support in here, but I'm not trading anything technically if it's reporting earnings tomorrow.
No man's land. I wish I could give you a level here without going too wide, right? I mean, 90. I'd look at 90 right now. That looks like a little wall there with a couple daily highs, and I guess you got two lows at the same area. Yesterday's low was 81.54, and that matches your other low at 82. So 82 to 90, pretty much throwing darts in between there.
Here is the calendar for the rest of the week. Here, NVIDIA is the big one tonight. That's what all eyes are on. Williams Sonoma, Gas, Splunk, Box, Snowflake is
Oh, Williams
also
Sonoma. Oh boy. Oh boy.
I know,
Oh boy.
I know.
That's high-end stuff.
Yep. I know.
It's come down a lot, though.
Yeah.
So if they say anything, okay. It's kind of like the Best Buy. If they say anything even remotely okay, the stock will rally on it. If they miss, Katie bar the door.
Snowflake is also, I believe, it's come way off, but I believe Snowflake, if you look at the high,
$128.
but if you look at the high growth tech, and I believe I saw this, Snowflake is still actually in that basket among that basket of high growth tech stocks. It is the most expensive on a price to sales basis still. So it's held up relative.
Yeah, it's only down 70%, not like 97% like Vroom.
Yeah. Anyway, they report tonight.
Wow.
Tomorrow morning is Alibaba, Macy's, Baidu, Dollar General, Dollar Tree, Burlington. So
all the dollar stores, they're after Target and Walmart. Again, the bar is set very low for all of these companies. I'll just say that. But we know the bar was set low for Target too, and they managed to bar here, and they came in bing.
and what about Snapchat, which was down 75% heading into or as of Monday's close, the stock was down 75%. If you had said, seriously, how much worse can this thing get? Well, it can fall by half in one day, as it just did. So, or almost half in one day. So,
Dan Nathan was on CNBC last night saying he bought Snapchat and he thinks that this thing could eventually basically get back to its all-time highs eventually longer term. I'm going to take the opposite opinion on this. Just my opinion. Don't at me or whatever. You don't have to go nuts on me. I believe Snapchat could be a zero. I'm saying it today.
I don't think it's a zero, but it's.
I think it could be a
think it ever
zero.
comes back.
I'm not saying it is going to zero. I'm saying it has the potential to go to zero because they're burning cash. I don't know if they have a path to profitability. If they do, it's not great. TikTok is eating their lunch.
TikTok is on another level. It's
TikTok is
another level.
and this is one thing to talk about. Snapchat, you can say, well, online advertising is dead because of Snapchat disappointment. I do not believe that. I believe it's TikTok. I believe Snapchat's fall and weakness is a TikTok problem. And is online advertising going to be weaker? Well, if we're going to recession, for sure it is. But I think it's kind of ridiculous that we punished Google $150 yesterday, and Facebook and all these other companies. Again, we're in a bear market, so it's hard to buy these things. But I just think Snap has a major TikTok problem. I don't think anybody that I know is using Snap anymore. Very few people, like you said.
I
don't
use
lots,
it.
and you're not using it either.
No.
Snapchat has major problems. I believe anybody who's coming in here thinking that this is going to just turn it around. I think there's bigger problems here. So I'm staying completely away from Snap. I will not be buying Snap at any price until they can show me a new product.
I'm hopping, guys. Sorry to interrupt you, Triple D. I'm going to go talk biotech with Robert Driscoll.
Ask him to find stocks that are trading below cash value because they do exist right now. Though that in and of itself is not necessarily
the problem. Yeah, because they burn the cash. I mean, this is the one problem, and this is where investors really, and even myself through the years, I've learned the hard way. Just because a biotech company is trading below its cash value doesn't mean it's a buy. And this is a simple reason. Their job is to burn that cash. It is their job to burn cash because they're trying, obviously, to come up with a new drug. So, I mean, that costs money. So it all depends on, will this burn cash turn into a product eventually? In many cases, it will not. So don't just automatically assume that a biotech stock that is trading below cash value is a screaming buy, because the majority of these companies will burn that cash. Will it turn into a product? In some cases it will. In many cases it won't. So you got to be very careful. XBI has been an absolute disaster. I bought some of this on $100 back at the end of 2021. It was a big mistake. I actually sold some of it. I should have sold it all. It's $67 here now. I don't know. This is speculative biotech. Speculative stocks are in the gutter right now and being punished. How low can XBI go? I mean, we're back to 2017 pricing. Could it continue to go lower? If all these little biotech companies continue to burn more cash and people are, and let's say, capital is getting tighter for them, there's going to be more of these companies that struggle. So we're a little bit of the environment that we're in. It's not as easy for these companies maybe to get that next funding, that next round of funding. So maybe companies that actually would have come up with a good product in a better macro environment, that would have came up with a drug in a better macro environment, may not get the funding and might go down anyways. So, I mean, that's where in a recession, speculative biotech is not the place to be.
No, it is not. All right, that is a wrap for our show today. Thanks a lot, Dennis. Have a great rest of your day. Everyone, we're going to head on over to live trading with Benzinga. Mitch, Zunaid taking you through the open today. I'll see if I can stop by for a few as well. If you would be so kind, before we go here, just drop us a like. How are we doing on likes today? Before I go, let me just check on that. And hey, while you're there, if you want to subscribe to our channel, that would also help us out a lot. We're at 382 likes. Let's get to 450 in the next 30 seconds. Thanks to Craig Johnson for coming on as always. Thanks to all of you for hanging out in the chat. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. All right, now let's get to 500. Also, benzinga.com/PreMarket, our redesigned PreMarket homepage. This show is embedded there. You can watch us on that page. You can get gainers, losers, earnings, the biggest ratings of the morning, all on that page, benzinga.com/PreMarket. Going to end the show right now. Hop on over to live trading with Benzinga. Stay tuned for that. Catch you guys later. Good luck at the open, everyone.
Introducing Smarter Financial News Search with Benzinga Pro. Now, with an array of familiar screening filters like price, short interest, and PE ratio, you can actually screen financial news for stock trading ideas. But that's not all. On top of fundamental and technical screening for actionable news catalysts, now you can tailor your newsfeed with Boolean operators or, and not. The result is perfect. By your own standards for your own news trading strategy. Prepare for the upcoming rebound. Capture news catalysts before major price moves